Yeah, and I want to get to your picks, but many would argue we never got out of this recession. If you take a walk down Main Street, you could look at the textbook definition of it and one could argue we're out, but I don't think people are feeling like we're out at all.
Yeah, we're not. Listen, obviously Joe Q. Public does not think that we're out of this recession. I mean, there's no doubt about it. And even the people that are getting jobs are getting them at a discounted rate. You always hear stories about somebody that was making $85,000, now they're making $55,000. And people are working 2, 3 jobs, usually part of the part-time variety. So when you look at all of that, nobody's really working, and that is the biggest concern on Main Street. But when you look at data, historical data, go back to 1948. This was the very first year that the government could actually compute gross domestic product in this country. And if you go back to that time, anytime we dip below 2% on the year-over-year GDP rate, this country always ends up in a recession. Right now, that rate stands at 1.6%. We're doomed. I mean, I don't care what anybody says. Economists, Wall Street economists can only predict the future by looking at historical results, and that is a great barometer right now. So when I see that, and I can only suspect that the third quarter is going to be that much worse or poor or slower, take your pick, whatever word. It's just, we're destined for it. First quarter of 2012, we will be deep into a recession.
Ugh, that's so awful. But is this why then you chose 3 gold stocks as your picks? And are you saying go with the miners and not the actual metal? Because just so people know, it's Barack Gold, Gold Corp, Newmont Mining. You went with the miners as opposed to the actual metal. How come?
That's right. Well, you can obviously look at the GLD as the ETF. I mean, that's fine if you want. But I look for on my Bloomberg terminal, all my stocks yesterday were down except for 3 of them, and those were the 3. And it's because gold was higher yesterday. But when I look at the mining companies, those 3 in particular, they pay a decent dividend. If you look at the Dow Jones Precious Metals Index, Barrick Gold ranks #1 in market cap. Then you have Newmont Mining, which ranks 4th, and then Gold Corp ranks 3rd. Freeport-McMoRan is #2. But when I look at those, they pay a decent dividend. They have a lot of cash on their balance sheet, and they continue to grow. So when I start thinking about of all the commodities out there and the safe havens that are out there, and we could talk about where to keep your money, gold is obviously going to $1,800 an ounce, but they're doing that. It's doing that for a reason. It's actually going to help those companies. The only downside risk on any gold mining company is that it will track with gold prices. So despite them making a lot of money on the balance sheet, it still will impact them just because of how gold is traded. It's similar to oil. When you look at Exxon or Chevron or Conoco, they tend to fluctuate with the price of oil. So what you want to make sure is that if gold, I mean, that's their only risk right now. Obviously, gold's down a little. I think gold's down a little bit. At least it was when I left the office.
It was
today.
down. It's down about $21 right now, $17.64. Of course, we all know it hit a high of $1,800, and it's loony, but it's probably not going anywhere. To your point, Todd, I love talking to you. You get all fired up.
Yeah, definitely, Tracy. Thanks for having me.
Always. Todd Schoenberger, Managing Director, Land Colt Trading out in Philly.